Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.
The deals do not stop for B2Gold as the company today announced another. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. Joining me is President CEO Clive Johnson. Clive, welcome to Kitco.
Yeah, nice to be here again. Good to see you, Paul.
Now, the news this morning was that you will buy the 50% of the Gramalote project in Antioquia, Colombia, that you didn't already own. You're buying that from AngloGold Ashanti. If everything goes to plan, that will be a total ticket price of $60 million, but with a $20 million initial payment. Talk me through that. How did that deal come about?
Sure. Well, we pride ourselves on being transparent, and we don't like to confuse or surprise our shareholders. So at the end of the day, there may be some people out there saying, okay, so 2 years ago, and we've had this project forever. AGA was operator, we became the operator. We've both been trying to build something that was large enough to have two companies involved in it. So we did an updated the feasibility a couple of years ago, trying to reduce the capital cost by some re-engineering and also looking at the resource and some more drilling. So we were getting close to what could have been an attractive project. Inflation hit hard. We managed to knock quite a bit off the capital cost by some sensible engineering, and then that was all eaten away by inflation. So we ended up with a project that had a positive IRR with the updates, but frankly not compelling enough for either party to feel like we wanted to invest that amount of money to build it. So we were on the same page. So we said, well, let's maybe look to sell it. EGA's got lots going on, so do we. So we went out to sell it, and frankly, we didn't get a lot of really stellar offers of tremendous value. And then AGA said, we'd really like to move along. Is there any chance you consider buying us out? So that's where we structured the deal. As you said, there's $20 million exposed, and the other $40 million will only be if the project succeeds. So a very low entry point for a significant amount of ounces. But we're not in the business of buying ounces and sort of hoping one day they work out or putting them on the ledger to say we have more ounces. The key point here is that it was never looked at as a potential smaller mine, because two substantial gold producers needing probably 150,000 ounces minimum to each of our account, or 200,000. So the mine had to kind of be 350 to 400,000 ounces a year. So the push was always to see if you can exploit the big 4 million ounce resource of low grade material and make it work. No one has ever owned it just themselves. We've had it since we went public. So no one's ever looked at it and said, what about if we don't need 400,000 ounces to satisfy two companies? What if it's 200,000 ounces a year for a single company, which would be in our wheelhouse? So that's part of it as well. We believe that if we look at it as a smaller project, there's a higher grade core in Gramalote, and therefore can we drop the capital dramatically, build a smaller mill, have less of all expenses, lower our actual environmental footprint there as well. We'll be looking at that. Obviously, we're busy with Goose, building it right now, the potential expansion of Fekola. This is not a near-term proposition, but during 2024, we will do an updated PEA to say, what about it? And from the face of it, our engineers are kind of intrigued by the idea of, could it be a profitable smaller mine? It's in Antioquia, the best part to be in Colombia. We have a permit to build it now, which we'll have to go and talk to the government about that, because it'll be a smaller mine, a new permit, but it'll be a smaller footprint environmentally in every other way. So we just thought the price was right, and this may have a shot to be a good project with one owner.
AngloGold Ashanti is walking away from a lot of ounces there, and at a bargain basement price in many ways. It does seem, from their point of view, a bit of a capitulation sale.
I won't pretend to speak for AGA. They've been a good partner over the years. We've had a common goal, worked hard together, both of us, to make it work. So you'd have to ask them how it fits into their corporate strategy. I know they do have the Quebradona project in Colombia, which they still seem keen on. That's a big gold copper project, which I think they wanted to focus their Colombian attention on. But I haven't asked them in detail how it fits their corporate strategy. I won't speak for them.
Okay, I think it's interesting what you're saying about perhaps a smaller starter project can satisfy the needs of one company where it wouldn't have satisfied the needs of two gold majors. What kind of optimization works are you going to be exploring or doing over the coming months to see if you can realize that vision? Sure,
there was some big capital numbers, not only the size of mill you'd have to build to produce 400,000 ounces a year. It was also diverting a river and tunneling and a lot of work, a lot of highly intensity upfront capital costs to do that type of thing. And power, all sorts of different factors. So we basically, when we did the update, the capital estimate was 900 million. We managed to actually knock that down to 800 million, even with staying with a larger scale, by doing some re-engineering. Now, inflation ate up that 100 million at the time we were at a few years ago. So there's the key components are what size mill are you going to build? What grade are you going to be? Higher grade, smaller, mining the higher grade core of it. So that's where you might get to that 200, somewhere around that 1,000 ounces a year. And lots of other things that trickle down from that. A big part of the budget to build, well, I think it was 65 million, which was moving local residents, which they're very keen on this project going forward. That's important. The local support is very strong. But if you reduce the footprint, you don't have the big tailings in the next valley over. So that reduces a lot of your cost and the need to move people. So there's all those factors factor in. So we'll see. We're not going to make any predictions today, but we'll do a new study. And we're intrigued by the possibility of it being a good mine with one owner.
When do you expect we could see the new study?
We're just saying 2024 for now. I mean, we're so busy with doing a great job. Goose construction is going incredibly well, and we're looking at the potential expansion of Fekola. I would say maybe later in the year in 2024 to have a view that we could come out publicly and say, we're not going forward, here's why, or here's what we think makes sense going forward.
B2Gold's always had a proactive and far-seeing M&A strategy, I believe. You showed this obviously this morning with picking up the 50% of Gramalote. You showed it earlier with your recent purchase of Sabina for the Goose project, a single asset gold developer in northern Canada. How is the build there going?
It's going extraordinarily well. I think that to give credit where credit's due, which I always try to do, is that Sabina did a lot of good work, a lot of good things. Obviously, a very good ore body, one of the highest grade undeveloped ore bodies in the world today, which you need for the north, of course. The challenges there. But they did a good job in permitting. They were getting ready. They ordered their equipment, ordered a good camp, and were getting ready to get going on constructing it. They did a great job in Inuit relations, which is, our history about how important it is for us to get to know local cultures all through BMNB, Africa, Russia, wherever, and really work with people on ESG programs. So they did a really good job of that. So we inherited a good relationship, and they did a great job in bringing the project to where it got to. So we were able to bring our financial firepower to it and our construction technical expertise. Now, they had aligned a contractor to build it, and they were moving forward to building it. At the end of the day, Bruce McLeod, to his credit, and the directors realized that perhaps a 47% premium to their shareholders might be quite attractive. The premium was so big because they were trading at a very low level because of skepticism about anyone building a mine in the north and how were they going to finance it, what was it going to cost, etc. So I think we did a very fair deal. We were focused on value, not the premium. So $1.1 billion Canadian, we were prepared to pay for it. It turned out that was a 47% premium because their stock was beaten up that badly. So there's a feeling out there in the investment community and amongst companies today that premiums are bad. Partly because some big premiums were offered and the premium disappeared the next day in the market. The market didn't like the deal. I argued that the premium is irrelevant. We're going to pay $1.1 billion for the asset. If their stock was trading at $220 and the premium was 15% for $1.1 billion, some people would be okay with that. But their stock was trading at such a low level, 0.3 times NAV, we were 0.9 times NAV. We could pay that premium and still pay the $1.1 billion. So it's about value. It's not about premiums. That's a bit of a different view of the market today. And so great project, high grade, well into construction. We estimated the capital cost with the due diligence. We go into the detailed due diligence before an acquisition. So we felt it was going to cost somewhere around 800 million Canadian to build it, starting production in the first quarter of 2025, over 300,000 ounces a year. Well, it turns out we're bang on. Our budget now is at $800 million. But interestingly, 530 million of that has already been spent. So we have 6 ships on the way up there from Quebec up to the Northern Sea and coming down the Beaufort Inlet to the landing area where we take everything off the barges, get them out before the ocean freezes, and build 160 kilometers of ice roads. In Russia, in Kupol, the same construction team who built the Kupol mine in Russia for Bima built 470 kilometers of ice roads in Russia. This is right up our wheelhouse. It's all about logistics. Getting everything on the ship, getting it off the ship, building the ice road. We are already standing up. There's some great photographs in our news release today and on our website. We're already standing up the mill building. That was supposed to happen next year. So we're actually in some areas ahead of schedule. We're sticking with our early 2025 schedule. Great acquisition, great exploration upside. Like many single asset companies, they were trying to build a mine to their credit and finance it. They weren't spending a lot of money in exploration, which makes sense. They had a $5 million exploration budget last year. We're at $28 million this year with 5 rigs there. This is elephant country. We're onto a really good deposit that we're building the mine for. All these deposits are open, and it's an 80-kilometer iron formation with tremendous potential. And really, I don't think I've seen our exploration people as excited since Fekola or Kupol about the exploration upside. But we don't pay for ounces that might be there. So it's a great project. Very excited. I've spent a lot of time up there already with the Inuit to talk to the leadership about taking the B2Gold culture and bringing it home after doing it all around the world, bringing it home to Canada. So it's nice to be not a foreign investor in this one, frankly. It's kind of nice to come home. I started in the Yukon when I was a 20-year-old. Now it's back to the north, back to Canada. And we're excited about the opportunity. I think it's going to be a great mine. I think we're going to show people how to do it in the north.
There's several points I'd like to follow up on there, Clive. I think your point about premiums is an excellent one. There's a big difference of paying a premium at the top of the market to paying a premium at the bottom of the market where you're getting a lot of value. I think B2Gold's got quite a reputation of delivering not just on schedule, but ahead of schedule. So it's good to see that could be the case this time around as well. And also B2Gold, when you purchase something, those assets tend to have very long tails on them. And it seems you've got that again with Sabina.
Well, then that's the key discipline for 30-odd years here. I mean, we're very entrepreneurial, but we're also very good at the bricks and mortars. And I find in any business, the entrepreneurs shouldn't be the guys running the company or running the mine when you're actually doing the bricks and mortars. We've always had that ability to be prepared to go where others fear to tread, to take on projects that others might not want to take on, but all about delivering on the promises that you make. So the rules of engagement in M&A for over 30 years now between Bema and B2Gold have been, we'll do our internal due diligence. We're one of the best teams in the world. We'll never pay for a deposit or a company that has a development deposit that needs higher gold price and or exploration success to justify the purchase price. So when I say that, someone's going to look at me one day and go, well, duh, doesn't everybody do that? The history of our industry, there was many companies, some of the biggest ones, who were actually overpaying for what was in the ground on the belief that size matters, and no one will remember what you paid for it, but also on the belief that gold price might make the deal look good, or exploration success, or both. That's been one of the critical reasons for our success, is the discipline. So Goose, we fully believe in everything we've acquired. We never paid for exploration upside, yet we found it. And that should be the bonus for the shareholders. Similarly here, we think there's huge exploration upside. We don't need that exploration upside to become reality to make this an accretive deal for our shareholders. That's really the strategy that's key.
Let's change continents now, Clive. How concerned are you about the political instability that we're seeing in parts of West Africa? Your share price has wobbled, investors are concerned obviously, but how real are the potential threats to B2Gold?
Well, I would say generally speaking, if you look at our track record of going where others fear to tread and managing political risk, we've done an extraordinary job of that all over the world, including Russia back in the days, and the Bema days in Chile, and then Nicaragua, and the Philippines and Mali, etc. So why have we been so successful? Part of that is the culture of fairness, respect, and transparency, and delivering the promise you make to these politicians and these communities that you go. So delivering the promises you make. But we've been able to figure it out time and time again. That's not a fluke. So part of the problem with political risk is the reality, and part of the problem is the perception for investors, which I fully understand, the perception of risk. So Mali remains a very good country to be in gold mining. You can ask Barrick, other companies that have been there, some of them longer than we have been. We were attracted to it, and the government knows the importance of gold mining, critical for their economy. I think it makes something like 20% of their GDP. It's been a gold mining company forever. And at the end of the day, it's critically important to the economy. So we did a deal with them under the 2012 mining code, which was Fekola and the Menanandi license. And that 2012 mining code set the economic parameters for the project. Now, many countries, including Canada, don't have a mining convention like that, where you're locking in your taxes, you're locking in your economic split, basically, of the benefit. So that was an advantage of being in Mali. And the Malian government now has brought a new mining code. And they've signaled that in the new mining code, it's going to be different than the 2012 code, the 2023 code. They're looking for more government ownership, and they're looking at the taxes and revenue split. We'll see what it comes out. It just came out. We'll see. But they've made it very clear publicly, it does not look back to any of the previous conventions. So we had a 2012 convention, which I think was very fair. At the end of the day, we spent over $500 million to build the Fekola mill and expanded it twice to be now almost 600,000 ounces a year. Great success for them and for us. But if you look at it, the government has a 20% interest in Fekola, direct interest, and then all the taxes and all the things that are the economic benefit of that. Basically, when you add it all up, the people of Mali get 50% of the economic value of Fekola on an annual basis. I think that's a pretty good deal, because at the end of the day, we put up all the risk money and they get 50% of the benefit, as I think they should. So we think that's a fair structure. Let's see what the new mining code is, because the new mining code, we're going to have to look at our two possible expansions at Fekola. One is trucking ore, weathered material down to the mill to add another 100,000 ounces a year, potential additional production, low cost. You don't have to blast it, truck it down the road. So that's phase one. We built the road. The government said to us, well, we're not issuing any exploitation licenses until the new mining code comes out, but why don't you go ahead and build that road? Which is an interesting indication the government wants to see more, why wouldn't they, more mining. So now we're going to go and apply for the exploitation. We'll have to look at the implications of the new code. And then we were thinking about, subject to a study coming out late this year, to building maybe a second mill in the north, an oxide mill. That could make 800,000 ounces a year was the potential for the Fekola complex. Now we need to look at that in the context of the new code. But I think the government of Mali, historically and today, believes in the importance of gold mining. And I like to think that at the end of the day, when we get down to sit down and talk, that they're not going to want to do anything that potentially kills the goose that lays the golden egg going forward. They clearly need foreign investment to build these mines. We're a very good partner, as others have been. I think at the end of the day, I like to think that with negotiations and discussions, we can find a way for all stakeholders to benefit as they do from Fekola.
You've bought several assets in West Africa in the past, obviously. One of your most recent acquisitions, Sabina, that's in Canada. Many people view that as a tier 1 jurisdiction, a more stable jurisdiction. With a lot of the events in West Africa recently, is that changing your views on potentially buying other assets in West Africa?
Well, I think there are different parts of West Africa. We're in the Côte d'Ivoire now doing some early exploration stage, but we like what's happening there. And also the governments do change and things change. But I would say right now the acquisition of Sabina was not just for geographical diversification. Some companies might do that and take something that maybe isn't their most attractive opportunity, do it because of where it is. We really tried to shy away from that. The right opportunity at the right time. I do think the Canadian North is changing dramatically. With the permitting is coming, it's getting better. And I do think the indigenous populations are realizing, I think ultimately the best way to protect their culture going forward is to do deals, fair deals with responsible mining people and other industries. And we're seeing that now in Canada. So that's why we left 30 years ago, because if you found something you didn't know if you'd ever get a permit and you didn't know about the indigenous relations. So here we are back 30 years later, coming back to Canada. So we can do it anywhere, almost anywhere in the world, as we've shown. So why would we not continue to use that advantage? So we're very open globally. We're drilling in Finland, other things we're doing around the world. So West Africa, sure, we're still looking at opportunities there, but we can offer our shareholders some geopolitical diversification, which is good for the company, good for the shareholders as well. So we'll still be entrepreneurial. We always have been. And hopefully we'll continue to deliver on that by actually making these ideas and these acquisitions reality. Very open still to where we do M&A. But I will say to our shareholders that we're not looking at any development M&A right now. We've got Goose being built, very busy there. We've got the potential expansion of Fekola. Down the road, maybe there's Gramalote. We'll see. We're not going to go out. We'll never build 2 mills at the same time. That's always been our thing. We're not going to start today. So no more M&A for development projects. We've got a lot of good ones. Exploration, we've invested in things like Snowline, where they have a major new discovery, a great group, great exploration team in the Yukon. We own 9.9% of them as a friendly shareholder. That's another way we're looking at having our footprint. We'll see where we go down the road with that. But also we have one of the best exploration teams in the world. So we're continuing to do exploration, $85 million this year around the mines, but some other projects, $28 million alone for Goose, the Goose project. So we're still everything from nuts to soup in terms of what we can do, exploration, M&A, production M&A. The one thing that may be of interest, if over the next few years, no rush, if we find a company or a project that comes out of a major perhaps that's smaller for them, that's a producing asset, we're not going to take on problem mines. But if we found a fit that was accretive to our shareholders to actually purchase some quality existing production, of course we'd look at that as a way to continue our growth. So that's kind of the approach that we're taking to M&A today.
Have you got your eyes on any assets that are potentially going to come out of Newmont and Newcrest?
Well, I think that everyone's waiting to see that list. Of course, big companies, it's going to take a while apparently. But at the end of the day, I'll be frankly speaking, I don't want to be negative at all because I'm an optimist. But I just can't, if a project comes out that's a good mine that is too small for Newmont, for example, in that merger, I don't think we're going to win a bidding war. Because there's companies that need acquisitions more than we do. And there's companies that will take more risk at that stage of hoping they find more gold or hoping, how do you do an accretive deal in a competitive environment? We're not going to win a bidding war because we're never going to overpay for anything, in our view, in our estimation of overpayment. Other people may have a different view. So we'll look for sure. And if we succeed, I think it'll make sense to us and to our shareholders.
And B2Gold is a $1 million ounce a year producer. You're now bringing in Kevin Dushnishki, ex-Barrick Gold, ex-AngloGold Ashanti as chair. Tell me about that. What's the value add you see there, and why is it important to get a person of that caliber coming on as chair?
Yeah, I think it's great. And Kelvin and I have known each other for quite a long time and got to know each other quite well because we had a joint venture. When he dramatically turned around AngloGold Ashanti, we had the joint venture of Gramalote. So we got to know each other quite well. And Kelvin has a vast experience in the industry, many deals in the past in terms of development projects, etc. He was with Sutton Resources, which was bought out by Barrick. Then he went to Barrick and he became the president of Barrick for several years. So he's seen it from the junior company. He's seen it to being taken over by Barrick and then being Barrick. And he told me when we started talking about this, he said, when I get to know B2Gold better, it reminds me of the early days of Placer Dome, which when it was Peter Monk and Bob Smith, and they were entrepreneurial, but they could deliver the bricks and mortars. He said, you guys are like the early days of Barrick when he was there, when it was exciting and entrepreneurial. That seems to have changed over time. But it was interesting. I said to Kelvin, I said, well, that's interesting you say that, because we modeled Bema after Barrick in the early days. We wanted to be entrepreneurial, but actually good at the bricks and mortars. Because most entrepreneurs in any business shouldn't run the business after they establish it, including mining. So horses for courses. The explorations that succeed should look to, as we've done, to a friendly takeover by companies that can build mines. And also sometimes the bigger mining companies, because mining itself is very detailed oriented business, the bricks and mortars, they're not very entrepreneurial sometimes. And I said for years ago, why can't we have both, as Barrick did back in the day? So Kelvin, vast experience. He's really well liked by the industry, well liked by the investment community. He has a great track record, and he's a great guy. And I think he's going to do a great for us. Gives us a great presence in Toronto, and we're adding him and others to a very strong board of directors, looking to the future.
Recent years have seen gold producers exercise capital discipline, pay dividends, give multi-year production guidance, not do any crazy M&A and other things, yet they still seem unable to capture investor interest, including B2Gold, even though you've pretty much been knocking it out the park. What more can be done to convince investors that these are companies that are worth investing in?
Sure, I think we have to show people what a modern gold mining company can be. Responsible mining, commitment to environment, solar plants in our case, other things to reduce our footprint, responsible mining company in today's modern world. But I think we also have to show people that not all, but a number of gold mining companies today are run like a real business. Where in the past that you buy gold shares in a gold mining company because golds may go higher and maybe they can run it. But you never got the opportunity to have a significant dividend. So we're running it so well as a business now, us and some others, where we can do what we do responsive. We haven't raised equity for more than 5 years. We can pay a big dividend to our shareholders, and we continue to grow the company and be a very responsible miner. I think we need to get more generous funds involved. I'd actually joke with them and say, well, pretend we're not a gold producer. Pretend we produce widgets. And we're selling widgets at $1,900 and we're making them for $1,200. So when we have no debt and we pay this big dividend, so we don't need widgets to go higher in price to be attractive. And we have other opportunities to build widget factories. So if you look at it in that context, we have to get people from looking at gold miners as, as sort of dreamers, gold explorationists as dreamers. And, you only buy them if you believe gold's going higher. Well, we have to get people out of that thinking. If gold goes up, we're all happy, of course, but we're pretty damn happy with $1,900 gold. When you consider we built a gold mine back in the Bema days in Russia when gold is $300 an ounce. So we believe that you deal with the price it is and you have to be profitable. Gold could go a lot lower and we would still do very well. If it goes higher, great. But we have to convince people to not look at gold miners and gold companies as they did before. The only reason to buy them is really maybe some dramatic discovery or gold price going higher. We need to get out there and more convince them that we are viable, we're real business.
If I was being critical or even cynical, I'd say, listening to a lot of the management teams, particularly here, it sounds more like we're at an accountants convention. Capital discipline, pay down debt, etc. There's not enough talk about mining. There's not enough talk about growth. Is there a danger that gold companies are becoming perhaps too boring, too conservative?
Well, I think that the actual mining has to be boring and conservative because you can't get it wrong. You got to take a mountain of rock and pulverize it and you somehow chemically get the gold out of it and make a profit. There's no room there has to be the discipline of that. But you don't need it in the other areas. That comes back to my argument about being entrepreneurial. Sure, you've got to be careful that we're not driven just by the finance side. We're not driven by the regulators. And that's one of my great concerns, actually, in the future of the industry, is I don't like the assumption when some of the regulators seem to think, well, we know you're doing things wrong. We know you might be criminals. We just haven't caught you yet. So we're going to make the rules so tough that you can't get away with it. Well, I find that a little offensive, to be honest with you, because I think I'm not alone as a CEO whose first priority is to make money for the shareholders and all stakeholders, the communities, and be good corporate citizens. A lot of companies are doing that today. This is not about the motivation of being largely or solely personal gain. And I just think the regulators need to give us a bit of a break here in being obviously monitoring us. And that's what a good board of directors does. You know, they're not supposed to be cheerleaders, but they're also not supposed to be watchdog per se. But the board is there to represent the shareholders and to do things like, and make sure we're audited. And we are a very transparent company. You have to be these days. We've always been extremely transparent. So I think there's a balance there. You can get overregulated, and you can be overly run by the conservatism of mining and the conservatives of the financial world. So that's the balance we have to find. I think we have it. We have to protect that. We have to really protect the company and its shareholders from overregulation and not becoming too conservative.
We've talked about a lot of projects, a lot of countries during this conversation, Clive. What are some of the key catalysts for B2Gold over the next 12 to 18 months?
Sure. Well, clearly the Goose mine, which construction, as I mentioned, is going extremely well. We're ahead of schedule in some of the construction components, and we have our team doing it. So I get a lot of comfort of that and what is a really logistical exercise. So actually realizing Goose, which is coming soon, first quarter 2025 production, obviously a lot of people are taking the show me attitude. Despite the number of mines we built, including Northern Russia, I understand that people are saying show me. People have a lot of problems in the north. So we get that. So as that mine comes online, and I believe it will come online like a B2Gold mine, on schedule, on budget, that's not far away. And as we de-risk it, so out of the 800 million I think I mentioned of capital, 530 has already been spent. That's a major catalyst going forward. Exploration upside in Goose is huge. We're spending $28 million on that. The potential expansion is Fekola, as we work with the government to understand the new mining code. The potential is significant to expand Fekola, as I've discussed. Now Gramalote may be somewhere down the road as well. And what else can we find in all the exploration we're doing, $85 million, which is a big number. But I would point out to people that we figured out, I think, as close as we could, the average cost of us for exploration to find an ounce of gold is $25 an ounce in the history of what we've done. So big exploration budget yields big results for us typically. So that's it. If we have the right fit for some other production, we look at that. But we really like where we sit today. I mean, I couldn't be happier where we are. Debt-free, dividend, great projects, responsible mining, world standard in ESG. But we have a great mandate from our shareholders to keep doing what we're doing. And as you can tell, we're still passionate about it.
Excellent. Well, Clive Johnson, thank you very much for joining us today.
Thanks so much. It's always a pleasure to talk to you.
This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.